In this video, we're going to talk about Meta Materials. So, the company has attracted a lot of attention from the traders community recently, mostly because of the volatilities of its common and preferred shares, as well as the strong fundamentals that Meta Material is able to deliver in the future. As always, if you appreciate what I do, please consider to drop a like, subscribe to my channel, and check out the links in the description. Before we start with today's video, I'd just like to make a quick and brief disclaimer. So, what is presented in this video is going to be my opinion and my interpretation on how things are and what they will be. They're not going to be considered as investment advice and should be viewed for entertainment purposes only. They might be able to help you make more educated decisions, but shouldn't be used as the only source of materials. Most of my analysis is done in the immediate past or just a few days before the uploading, and the price action may no longer reflect what you see on charts by the time you watch them. But as a tool, it's still useful and relevant to see what happened in the past and what my predictions were, and to see if my analysis was right with the benefit of hindsight. Also, my analysis will try to cover the stock as comprehensively as possible, and it's going to talk about more factors than just the latest news or the price actions. For example, we're going to talk about the company's financials, the company's stock market trends, the long-term perspectives, and the shareholder behaviors. These are going to affect the timing, the quantity, the actual decision of whether you should buy the stock as well. Since most of the viewers are watching my videos for the first time, it's important for them to consider all the factors. So with all that being said, let's begin with today's video. Meta Materials develops equipment offering security, scalability, and high added value. It is a tech company that started its operations back in 2007 and is based in Dartmouth. Its clients are multinational corporations including Airbus and Lockheed Martin. The sector Meta Materials is involved in is highly sophisticated with possible exposure to defense secrets, which might let us think that if the company has financial troubles, there will be someone who might think that they need to intervene because they need to help the ship, to keep the ship afloat in critical moments. Same happened for Ford and GM and Chrysler. The reason why is because those car manufacturers, they don't just manufacture cars, they also manufacture defense systems. It's also worth mentioning as well that for Mmtlp and Mmat, the main attractions are not just the fundamentals, but the impending S1 approval, which may trigger chain events related to short squeezes and other things like that in the financial market. So over the past few days, the stock price of Mmtlp resumed its bullish push and has now made new highs and testing the $10 level as I made the video. Now, the common stock is reaching like the $2 level, and I think that it's ready for additional takeoffs as well, simply because as far as the common shares is concerned, this is by no means any sort of peaks. It's a relative, bullish momentum, but its historic highs were much higher than that. For the preferred shares, this is the new high and certainly a very encouraging sign for the shareholders. It's currently hovering around I would say $9 and $9 to $10. And I was saying that maybe we're going to go through potential retracements. As it turns out, we didn't. People are more optimistic than what I initially thought. So this is all the more power. Now we have a clear answer that people are willing to bring the stock to higher, the new highs. For common shares, the starting point is relatively low, so the current level is also relatively low. The peaks were reached twice, so once in 2014 and another time in 2021. Both were around $10. Other than that, the price of common shares remained relatively low, including where it is now. So compared to the preferred shares, the common shares, the MMAT, are less hesitant in the current level, and it's gonna wait less and regroup and take like less time to regroup before going to higher levels, simply because it doesn't just benefit from like the short-term momentums. It also benefit from people who want to invest in the company for the long term. What people are saying online is that they're very hopeful that things are going to go well with the approval and that they will be able to have a payday with both MMTLP and MMAT, but especially MMTLP. Now, at this point, I also wonder like how much of the news is already traded in, and that once the news is announced, if people are not just gonna be selling the news. It's highly possible, so this is why I would say that as far as MMTLP is concerned, if you want to trade it, is a short-term trade. It's not something that you want to be holding on with for like weeks to come. I think that we should count the holding period in matter of days. With that being said, let's also take a look at the company's financials. The revenue increased significantly from around 624,000 to 2.5 million over the past year, which is a good sign supporting those who want to invest into MMAT in the long term. The operating expenses have picked up as well, but not as significant as the revenue increase, although it is also at a higher level, which ends up having an operating loss. The cash reserves is mostly stable, and this is probably from like the equity raise, but it has fluctuated a lot in late 2021 and early 2022. The equity dilution has been increasing over the past few quarters. In other words, the total number of shares has been increasing over the past few quarters. But in my opinion, this is not a determining factor that'll see whether the stock will do well or do bad. The liabilities has also remained constant over the past year, which shows that they do try to keep a tab on how things are going, which like limits the solvency risks at an acceptable level. Overall, MMAT has operating losses, so slowly it's digging itself into a little bit of a cash flow hole. But in my opinion, this is going to be a secondary factor to consider compared to what is currently at stake. Like what's currently going on with the approval and everything with the short squeeze as well. These issues are short term, and they will be far more relevant things to focus on for the time being. Regarding the shareholder composition, 46 million shares are currently owned by institutional investors. This is a good sign on paper, at least, because it shows that it's significant and people are putting their trust into like MMAT's long-term future. Because as we know, institutional investors tend to stay in the longer term than the retail. But at the same time, I don't think that this is significant enough for me to hold the stock for long term just yet, especially not MMTLP. Now, MMAT, I would say, is worth investing for the long term based on its current price and the fact that this is the common shares, so it's going to be here as long as the company is here. MMTLP, I feel like once the approval goes through, it's possible that we would be talking about a different company altogether. Of course, the details in this area seems to be a little bit vague still, so we cannot be, like, at least I'm not sure at 100%. But what I'm saying is MMTLP has a very important and significant short-term momentum, whereas MMAT has both. Regarding the short order, there's currently around 7 million shares that are being shorted, which again might explain the sudden surge. We have to remember that in the meantime, the total trading volume is around 700K. So if they are forced to redeem just a portion of those short positions, this could result in a very significant price reaction. Now, I would recommend to buy MMTLP now, because I don't think that this momentum is going to last, and also the shareholders have or like the new shareholders, people who want to trade MMTLP, has made up their mind. They don't want to wait. They want to buy in now. So this is why I also think that if you wanna get involved with MMTLP, the time is indeed now. Can there be retracements? Can there be pullbacks? Yes, absolutely. But also, we know that this is going to be a short-term play, so if you don't want to miss out on the potential gains, it would be better if you would have a small position in MMTLP and then to dollar average in more in case it goes down. If it doesn't go down, I wouldn't recommend to commit more capital at that point because we truly don't know where the stock can go. And regarding the MMAT, I would say that can be a longer game play. So if you're comfortable with trading stocks that are relatively low on both market cap and share price, then definitely go ahead with MMAT as well. Like slowly build up a position over the next 6 months or so, and maybe make a quick gain when the news hit in case it goes up. If it goes down, it's okay as well. Just keep building it. And the reason why I said realize the gain is because once you realize the gain, you can use the gain to buy more shares and to stay in MMAT even longer term without feeling, the need to check the position every single day, because they're bought with something that has been gained from the market. It's not your money, at least theoretically. It is your money, of course, but it's money that you gain. It's not the money that you can potentially lose from like the initial investment. So this is why I would say for MMAT, you can build up the position anytime that you wish. For MMTLP, if you want to get involved in it, the time is now. Would I recommend to buy MMTLP? Yes, but be very careful with the exposure that you're having, because if you go in heavy with leverage on top of that, then any sort of retracement can hurt your position very badly. Now, the exposure I would be recommending is between 0.5 and 1% of your portfolio. Now, given the current market environment, I believe that the equity market is in a vast phase of correction, especially when it comes to tech and growth type equities. The financial market has been living and breathing thanks to the continuous creation of new capital, with different waves of quantitative easings, which will have consequences on the price of assets as well as their yields. With the interest rates kept relatively low over the years and the increase of amount of capital in circulation, this will keep putting significant pressure on the profit that we can expect in investment products across the board. And this, by the way, is a reality that may shift in the years to come if the interest rate of core infrastructures within our globally financialized system increases. It's useful to remember that the market doesn't represent the real economy, and of course, the real economy doesn't always reflect in the stock performance, since the name of the game here is ultimately called supply and demand, which depends on a whole bunch of factors that go way beyond our own control. If we think about it, this is like saying, if your neighborhood house that is put up for sale is only allowing those who actually want to live inside to buy it, versus if you allow every single type of buyer with different intent or reasons to buy or to sell it. So obviously, there will be a significant difference in the price of this asset for those two scenarios. The market currently works more like the second option, and assuming that it would only reflect the fundamentals of the underlying economy would correspond to the first option. There are a few elements that are considered to be the reasons. The first one is the significant increase of amount of money printed by the central banks around the world, which is then distributed to the banks, with the expectation that they will be loaned to businesses. Normally that's a good thing, but with a lack of opportunities in the real economy, the significant portion of that money actually went back to the financial system to buy up the price of existing assets. Now that the QEs have been wrapping up or ended around the world, I think that this drive behind asset price may no longer be as relevant as it is right now for the future. It is now compensated by the arrival of capital from one region to another, and from one sector to another even within the same jurisdiction. With the increase of tensions around the world, capital is always looking for a safe haven to park their money into, not just for a place to grow the nominal value, but with a currency that tends to keep its purchasing power as well. The third factor is the creation or the birth of artificial bubbles, either maintained by the market trends built up over the years or out of necessity. Capital needs to find a place to stay. Some good examples of this would include the EV sector in the 2020 and the oil and gas securities when there are tensions around the world. Either way, when it comes to the price trends of the market, the degree of uncertainty is a key drive behind the price fluctuations, and that is likely going to increase as we go on from there. When companies announce that they are going to enter or exit different markets, or that they will be trading on different platforms and exchanges, this can all have significant ramifications on the price of this asset. Some of the considerations to have when operating in this context include having a clear view of what is going on, especially regarding the cash flow and the capital flow, and avoid certain potential pitfalls. One of these is to be careful with short positions. Inherently, short positions are riskier than long positions as the downside of long positions is limited, whereas the short positions can lose you as much money as the stock price may reach, which is infinite. On top of that, we're now seeing a new phenomenon with short squeezes, involving a group of retail traders propping the stock price up, forcing short sellers to recover their positions. Sometimes the attempt will not succeed, but sometimes they end up in very spectacular success. Something else to consider is to treat tech stocks with care. To start, ask questions when the price of a security skyrockets without real fundamentals. It doesn't mean that you shouldn't be touching it with a 10-foot pole, but it does mean that there should be a difference between the decision of long-term holding and short-term trading. Either way, a rule of thumb is that each position should be structured in a way so that their individual performances will never affect the portfolio's stability. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.